Hello, traders. Cousin Vinny coming to you from theclosingprint.com, May 21st, 2023. In this edition of your weekend video newsletter, we'll discuss the indices, all of which managed a positive close last week. We do have more bullish indicators at 9 at neutral, and 2 at bearish. The bearish are the dollar and yields moving up into this week. With that in mind, let's review.
There you go.
Starting off with the S&P 500, we did close right at resistance, the 4,200 call wall. The SPY and the Q call walls, however, did push a bit higher. We do have realized volatility at extreme lows below implied volatility, which is telling us to be cautious going into Monday trading, at least for the first half an hour, and looking for direction from institutions. As OPEX is behind us now, the next biggest OPEX is June. As you can see here, quad witching, mostly dominated by calls. And yet another reason to be cautious on Monday, while at the same time the indices are set up fairly nicely. We got RSI above 50. Again, we are at resistance. MACD has crossed and stochastics is still rising. So there's still some momentum that we could see on Monday or Tuesday. So overall, this chart is more neutral because we're at resistance going into Monday trading. Keeping that in mind, we do have rotation in the markets. We've seen lately the bottom left quadrant are the lagging sectors. You can see most sectors are lagging, with technology, consumer discretionary, and communications, led by Meta, are in the leading quadrant. So we could see that continue. Would also like to see rotation of these 8 sectors to start moving towards improving as we start trading on Monday. Overall, this is telling me to stay focused on technology, communications, and consumer discretionary. That said, the 2 caveats that we have this week are the US dollar, which has bottomed and has started heading towards the 200-day moving average overhead. In addition, yields have started moving higher. So we do have a range that we're dealing with. We're right in the center line of this range, so we could get rejected somewhere in this area. RSI is rising. All depends on the Fed and the debt ceiling conversation. I'm recording this on Sunday morning, so I don't know what has transpired. I haven't looked at the news, so we could have something that comes out late tonight or Monday, and just need to remain cautious because of them. Being we are at resistance and the dollar and the 10-year are moving higher, we need to keep an eye on tech stocks, which would be impacted greatly if the dollar and the 10-year move higher. We need to be aware of that. Therefore, if we do see the dollar and the 10-year moving higher, keep an eye on the New York FANG stocks, those 15 stocks that we've been trading for the last couple of weeks. They did break out over the last 2 weeks and are showing a 236 Fibonacci pullback, which would coincide with a pullback to this breakout level. So that's something we'll be watching too. RSI is showing muscle. We're above 50, so there's a lot of strength in the trend. A lot of people look at this as overbought for a reason to sell. I look at it more as strength of trend. Yes, we can still pull back and be bullish. We just have to wait for the consolidation to complete. The reason why I'm watching for consolidation and still remaining bullish should be obvious when you look at this chart of the New York Stock Exchange common stock McClellan volume oscillator. Okay, we hit extreme overbought. Note the green arrows, the pivots. Also note the green circles, areas where we didn't pull all the way back to extreme oversold before bouncing, and how prices did manage a follow-through in each case. We're set up that way this week, so we're watching how this turn of events in the oscillator could point to a bounce, as we're right near a trend line, with additional indications on the S&P 500 stocks outperforming the CRB index or commodities. The rate of change has cycled and is moving higher. As you know, it's built on 4 time periods, as you can see here. And when the shorter time periods turn faster than the others, we get the crossover and a signal that could persist for a while. This is a monthly time frame. We are above the red line, a monthly 12-period moving average on the chart. We're above that level and pushing higher. If everything were to fall into place, we'd also see small caps gaining strength. We did have some of that on Friday with a quick reversal from the highs as options traders took profits and OPEX came to a completion. There is major gamma at 180, so if we do see small caps moving higher, that would be a good sign for the bulls. If we get rejected and pull back and the other indices pull back from resistance, that will be what we're looking for at least the next few trading days. All right, so coming into this week, IBD 50 setups are shown. Those could follow through. The one with the asterisk, DraftKings, looks the best. Looking for a follow through in DraftKings. It already pulled back to its 21-day moving average, and Stochastics is recycling from oversold. In addition, we have stocks that are showing relative strength with an additional group of stocks that showed up on the Stochastics oversold scan. Many of them are from different sectors. You can see Abbott Labs, Bygene, that one's been active lately, Merck, Orly Automotive, Quanta, Walmart consolidating after earnings, while we look for all of these to potentially move forward this week. Many of the chip stocks followed through last week. We wrote a blog post on Tuesday morning looking for a follow through in applied materials, Onto Innovation, NVIDIA, AMD, in this case, Axcelis. That did break out of a sideways range. Wouldn't be surprised to see this pull back to this breakout level. RSI is still pushing higher. Volume was above average to start the week. MACD crossed and is rising. The only issue that I have is that Stochastics is embedded now, so we're watching for opportunities on a pullback to buy some of these stocks that broke out last week. DraftKings, as previously mentioned, had a nice setup. It's pulled back to its 21-day. Note it's been making higher highs and higher lows. The 50 is above the 200-day. 9, 21, 50, and 200-day are said to be stacked. RSI is above 50. Looking for this to follow through. It may or may not. Still, the setup is there. Here's the weekly time frame. You can see that this breakout level around 2160 was achieved after earnings. We're looking at 30, looking for a follow through on the weekly time frame. Note the momentum on a stock that's poised to break higher. In addition, with most of the IBD 50 stocks trending, rising along its bullish 21 EMA, we're looking for more follow through in some of these names that broke out and continue higher. Global E Online breaking out of a large pattern, looking for a follow through, relatively inexpensive name. Green Brick Partners, the builders have been very strong, continue to thrust higher. Again, we're looking for trends like we have at Novo Nordisk. Some of the stocks in the healthcare and pharmaceuticals look very strong to finish the week. We're looking for that to continue. Merck was strong. ServiceNow, of course, we traded that one last week as well. I believe it's a little bit overbought. Maybe it fades a bit first, but overall it's bullish going forward. Royal Caribbean, many of the cruise lines and travel related sectors are seeing lots of candidates following through above their 21-day, trending higher highs, higher lows. Some of the healthcare related names that had AI, the thoughts of AI attached to them, like Shockwave, Intuitive Surgical, those continue to push higher as well. Looking for Shockwave to continue. It's basing presently and looking for a volume to start picking up to indicate institutions have started buying again, along with some of the stocks in the restaurants and bars group. Wingstop did base for the last couple of weeks, but you can see it's clearly trending along its 921 50-day. All three are stacked above the 200-day. Volume looks pretty good. Just waiting for price to turn. With stochastics oversold, as a function of price, those two will continue to rise. RSI is above 50. Looking for a follow through in a lot of the restaurant names. Check out your favorites. Maybe there's something there for continuation along with Wingstop. Shockwave, as we previously mentioned, Intuitive Surgical, a lot of that AI business being attached to these names. Looking for this trend to continue. We're starting to push above 310. 9 and 21 day are pointed up and to the right, along with the 50-day moving average. Oracle also breaking out of the base last week, following through, looking like it could continue. Look at the volume. Onto Innovation, another semiconductor industry group name that we wrote about on Tuesday. All of these followed through, as you can see, ending the week at highs and a bit overbought, but we'll just keep an eye on the markets. Remember, we're cautious going into the week. We don't know what the debt ceiling has in store for us. We got OPEX behind us. Now we have another OPEX ahead of us, the June quad witching. So it's best to wait and look for institutions to give us direction. I'm really interested in what the dollar and the 10-year do to start off, because we have strength in those two. That would probably create a headwind in stocks that are already overbought, along with NVIDIA, which has earnings on Wednesday after the close. We have a lot of tech with a lot of stocks that we've traded over the last few weeks reporting earnings this week, which would help to confirm whether or not we could see a follow-through into June. Additional stocks from a scan looking for oversold conditions on stochastics. You can see Abbott Labs, watch Merck, and the pharmaceutical stocks. There's many of those that are set up and look like they could follow through. Avalon Bay in the real estate REITs and property development group, oversold and turning right near its 21-day moving average, above its 50-day. CBOE, flat base, stochastics turning, look for a continuation and a breakout above 140. Church and Dwight, we've traded before. That one's right at the 21-day, stochastics turning. You can see that all of these are set up and looking bullish. Just need to see some follow through this week and trade accordingly. Whole logic. So that's going to do it for me. This is because of Vinny coming to you from theclosingprint.com with your weekend video newsletter for Sunday, the 21st of May. OPEX is behind us. It pays to be cautious for the first hour or so on Monday. Let's see what happens. Maybe we'll get some sort of news out of the debt ceiling, and we can trade off the watch list, which I'll send out later tonight around 12 midnight on the East Coast and around 9 o'clock on the West Coast. So be sure to check your inbox for that. Otherwise, enjoy the rest of your weekend, and I'll talk to you in the morning. Take care.